All right, so hello everyone. Welcome to Binance Hall. I'm Peter Ip, the head of marketing for Virgo Group. Now, before we begin, how many of you are here because you heard that the word Binance and that a Chinese guy with glasses who is from Canada is going to present something about Bitcoin on stage? Show of hands. All right, we have one. That's a two. That's good. That's good because ZZ and I, we share a lot of similarities, except for one. I got hair, so. Anyway, how many of you know what halving is for BTC? Please put up your hand. Just let me know. Ooh, actually, that's pretty interesting. A lot of you know what it is. So anyway, great. Now, for those of you who are either too lazy to put up your hands or that you're here because you have a long stand at your booth and you're just coming here for a rest, this is what halving is for you. So, okay, here it is. So in basic terms, halving happens approximately every 4 years, okay? So where the amount of new BTC issued to miners is reduced with supply being halved, okay? So previously, this happened back in 2009, 2012, 2016, and then 2020. What we do know now is that we're expecting the next halving to happen around April 8th, 2024. This estimated date is just as exciting as the expected due date of a newborn, except you probably don't want it to happen 7 days earlier when it's April Fool's Day. Everyone's kind of saying, is this real? Is this not real? Okay? So what does halving mean to those of us who invest in BTC? I think all of you are probably more excited to know about that. With the supply being reduced by half, the sale pressure will for sure decreases, okay? Using an analogy here, you're a factory that produces a certain amount of goods per day. If you increase your production, you're not selling fast enough, you will have a huge surplus, okay? But what if you cut your production by half? Well, the pressure to sell is now gone. You may just sit back and enjoy margarita or Stella. Now, giving you a better view of what happened for the previous halving cycles, notice that since 2011, Bitcoin price, which is in black, the black line that you see right here, has been increasing ever since. Yet the supply of Bitcoin drops quite rapidly. The straight lines that you see indicate precisely when halving happened. When we talk about these halving cycles, we cannot help but notice a similar pattern happening to BTC pricing. Each cycle you see the following: a correction phase, an accumulation phase, an expansion phase, and an all-time high phase. So putting this cycle into visualization in comparison to what had happened in the past, historically, you see, as we all know, history does repeat itself. Well, the real part, the red part that you see here is where the correction happens, which also indicates that start of a new cycle. As you could notice during the red phase, the BTC price dropped quite dramatically, often by 20 to 30%, unfollowed with an accumulation stage where volatility happens quite frequently, okay? And then during the next stage, which is the expansion, or what we call continuation, the price is trending up slowly, and then followed with a phase which is probabilic or at an all-time high, is where the price reaches the new heights. As we look at the effect of halving, we notice the following. On average time from the bottom to the next one, which is roughly 477 days, the price appreciated roughly 29% to 400%, 1 year before halving happens. And then from halving to the next economy bear market, the price appreciate even more, roughly about 600 to even 9,400%. Now, revisiting the next halving dates, which should happen in April, we have roughly 5 months until then. As you all have seen recently, the price of BTC leaped. Yes, we also noticed that comparing to what we have happened in the last few cycles, gains also kind of flat out a little bit. So that being said, everyone is kind of expecting, yes, it might go up, but then we know that the gains is going to flatten by a little bit more than before. Now, when we study this, we cannot help but notice something very interesting Let's take MicroStrategy as an example. They purchased Bitcoin for $4.7 billion. However, they bought more when prices were up, unless when, and then they actually did not purchase when the price is down. As you can see here, if you notice the black line, how it's staggered up, when the Bitcoin price in orange actually went into new heights. It means that MicroStrategy has been picking up Bitcoin when it's at its highest. Where from April 11, 2022 onwards, it went through a period of more stable hodling, basically holding on. Not until April 11 of this year that MicroStrategy is active again. The moral of the story is, MicroStrategy did become one of the major holders of the coin, yet from a pricing perspective, if they were to use another strategy, it might be better for them from a cost perspective. Now looking to this, if the objective for you is to hold or purchase as many Bitcoin as possible and wait for the new heights to come by, then after comparing several strategies, we found that MicroStrategy could actually have had roughly 13% more Bitcoin than what they have now. It's a simple idea when you purchase more when prices go down, and you purchase less when the prices goes up. A very, very simple logic. This is called dollar cost average strategy. When you accumulate Bitcoin at lowest, it helps you to reserve on that otherwise could have wasted what you have purchased at new heights. So you don't have to be fanatic when the price is trending up and trying to grab as many as possible. But when you lay it out flatly, you are actually accumulating more than what you have. Now, how does this ties in with me being here? Well, Virgo does actually have recurring buy. So you can set your purchase time to purchase daily or weekly or monthly so that it flattens out your costs, which is in a way helps you to accumulate more without the high costs. Now onwards to some emerging trends in crypto. Everyone probably has heard about the recent ETF applications to SEC. One that had happened basically over the course of the last few days with BlackRock filing for ETF for ETH. Yes, we noticed from CoinDesk that only 12% of current financial advisors actually recommend Bitcoin to clients, and 77% of them actually want to recommend Bitcoin after ETF launched. This is similar to you going to a doctor. Basically, the doctor telling you that, hey, you should pick up as much vitamin C as possible, and then you get sick. And then, obviously, it will be too late. So the whole concept here is that you try to do that accumulation earlier before what's going to happen soon. These are just some of the ETFs that have been filed since 2021. As you can see in the last column, over 50% of these ETFs may have a decision before halving. So a bit of food for thoughts, for all of you in terms of what I have talked about for picking up Bitcoin as accumulation right now from a dollar cost perspective, that you can flatten out your costs. Who likes to buy expensive when you can actually get it lower, right? And onwards to a little bit about staking. It's important to notice that ETH staking has only been up after the merge and also withdrawal. The reason for so is that as stable as the ETH network is, it promotes low cost and efficiency. As we could see here, staking in ETH is quite stable, meaning that the trust in the network's yield is quite solid. Consider that about half the yield comes from transaction fees. With the network's expansion and stability, the yield from ETH looks quite solid, actually. It's not going to be very aggressive, at 5.4%, but it's quite solid return if you compare it to, stashing it away at a bank. Another trend that we notice is the trust in stablecoins. Us working in exchanges, we can clearly see from the last half year how USDC continues to be strong even during the bear markets, with only a 24% drop in value. This is contributed by the outstanding supply that has grown in votes to support transactions. And even more so during these economic times, it helps to protect savings from inflation. The USD has gained on AUD by 45% over the course of the last 10 years. This is something that we all face, and there are some countries where the local currencies are inflated by so much that it's hard for them to turn around. Stablecoins have a solid trajectory that is similar to a savings account, except savings account, even with the annual yield, you may end up with actually less. The last thing that I would like to talk about is real-world assets. How many of you are currently investing in real-world assets right now? Maybe in real estate, maybe in gold. Okay, I see someone here. Okay, so this is becoming quite a trend across the globe. And some of them have similar yields to staking. We noticed that assets, including investment in private credit loans on DeFi rails, is becoming quite a huge market, considering that's about 1.6 trillion in TradFi right now. Yet some may consider this to be a bit more of a risk than, there's tokenized treasuries, in which is also becoming a true trend with an average yield to maturity at 5.24%. By investing in tokenized treasuries and bonds, it has similar outcome as your savings account as well. So what we're trying to promote here, as you can see, is alternative asset management. Now, obviously, you could stash your money away in banks, which probably in good times it will give you what, 4%? How many of you are getting 4% from your bank accounts right now? 5, maybe, probably not even. I see some heads shaking. So if you're not getting that, why not consider what I've talked about? BTC, staking, real-world assets. Okay, the yield from all of these are roughly around 5% or more. Obviously, we know that halving is coming, so it might fluctuate a little bit even further. However, the whole concept or ideal is to consider expansion to your current portfolio. Now, obviously, if you're trying to say, okay, well, I'm going to put all my eggs in one basket, that's a little bit of risk, right? That's quite risky. But if you were to consider, let's just put it in real-world assets, let's just put it in a little bit of DeFi, a little bit on TradFi, and then across your whole portfolio, what you're going to see, as we have just talked about, you're picking up assets when it's at its lowest. Obviously, Bitcoin, how far it can go, I'm not going to advise on that because no one can predict so. But however, if you have seen what had happened in the last week or so, you kind of identify that BTC is on the verge of actually climbing up even further. So again, consider the fact that there are many strategies out there, but dollar cost average will probably give you the best pickup in terms of your cost. So again, at Virgo, we're trying to actually encourage our users to diversify their portfolios. We're a spot exchange here in Australia, and originally we're from Canada, so we're fully licensed here. But however, at the end of the day, we just want our users to consider and think even further with their assets. You don't have to put all your eggs, in one basket. BTC may rise, but however, after halving, what will happen? There's a lot of rumors that it's going to flat out, okay, the price of it. There's a lot of rumors that saying that it might even dip. So consider the fact that maybe you want to look into picking up now and then offset, basically off-ramping after as well. So yeah, so basically that's about it for my part. If you have any questions, feel free to come by to our booth. We're right there near the Outer Theater. So thank you.